Now, when we have Americans and people in other parts of the world worried about the American economy, this is probably exactly the right time to propose and to go forward with a reform of our tax system and to make some very specific strategic tax reductions to put America back on a pro-growth path, make sure it stays on a pro-growth path, and make sure that it accelerates that pro-growth path, and to restore the confidence of our citizens. I believe in supply-side economics. For me, it's not just a theory. It's something I practiced when I was mayor of New York City. I cut taxes 23 times. I proposed something like 64 tax cuts. 23 of them got done in one way or another. We cut the personal income tax by 23%, and we were receiving 48% more revenues from the lower tax than from the higher tax. So when someone says, how can you cut taxes if you have a deficit? The answer is, if you cut taxes and you pick the right taxes to cut, you'll actually lower your deficit because you'll make more money. In this particular case, we cut it by 23%. We got 48% more revenues from the lower tax than the higher income tax. And then another example, we cut the hotel occupancy tax, and we ended up, after a very big cut in the hotel occupancy tax of about 30%, we ended up with 90% more revenues. So the reality is, by the end of the time of my being mayor, we had cut the tax burden by 19% to the lowest level in decades. I delivered more tax relief than all of the people combined running for president. And that's why I think I can claim the mantle of being the most fiscally conservative and the one who is best at strategic tax cuts of anyone running for president of the United States. And I wanted to make that point here in Florida because you know what you're going to prove in this election? You're going to prove that Florida counts. I know Bill and Steve are students of history, so am I. We've had tax cuts before. President Kennedy cut taxes. The economy was stimulated and grew. President Reagan cut taxes. The economy was stimulated and grew. President Bush cut taxes. Exactly the same thing. When you cut taxes, you liberate the potential of the American people, and you unlock the genius of the free market. This past June, I unveiled my 12 commitments to the American people. One of them was to cut taxes and reform the tax code. Another was to restore fiscal discipline and cut wasteful Washington spending. Month after month, we've detailed a number of these proposals, including these tax cuts. And now, when we pull them all together, they really add up to something quite historic. If they were all enacted, the ones that we've talked about and the ones we're going to talk about today, it would be the largest tax cut in the history of the United States. And that is exactly what we need to stimulate our economy, to stimulate our private economy, and to say to investors all over the world that America is a place to invest because America is a place in which we're committed to growth. I'll fight for each one of these reforms, each one that we talk about. We might not win each fight. When I was mayor, I didn't win each fight. So we put these out there as our list of the things we're going to fight for. We will fight for each one of them. We may not get all of them, but if we get enough of them, as I have in the past, then we will create that stimulus that I'm talking about. And over the next couple of weeks, we're going to talk about the other important aspects of this plan. There are really three parts to it. One are the tax cuts that we're talking about today and that we'll show you today. Second is reducing spending and plans for doing that, and we'll do that as we move along. And third is getting control of regulations. The three ways in which you can drive jobs out of America is to overtax, overregulate, and overspend. So we got to get control of all three. Today we're going to talk about the tax part of it. So let me just briefly describe to you what it entails. The first and maybe most exciting part of it is America needs a flatter, fairer, and simpler tax system. The federal code is now 9 million words. The United States Constitution is about 5,000 words by comparison. 9 million words. And I'm not sure they all make sense. Americans spend approximately 6.5 billion hours each year filling out various tax forms, keeping records, learning the rules. The costs of complying with taxes are estimated at something at $200 billion a year. When the federal income tax was first introduced in 1913, when it was first introduced, do you know it could be filed on one page, one single page? So, what we propose is, let's have a one single page federal tax form as an option. Here it is. I know you can't see it. It's this kind of small print, but it's still, you can still read it when you get up close. You will have the option, if we get this passed, of being able to file your tax on one single page. It'll be called a fast form. It's a form that allows you to put your income and the critical deductions that are important to the American economy. It's a fair and simple tax form, a fast tax. It'll offer every American an opportunity for a tax cut, and it will allow them to preserve the major deductions that have some real implications for our economy, like the mortgage interest deduction, the charitable deduction, the state and local taxes deduction, the child tax credit deduction, of course the personal exemption, and then the new health care exclusion that I've talked about, that I think will revolutionize the way in which health insurance is purchased and the cost of health insurance. That's basically the key to it. There's room for each one of these, and then there are just three tax rates: 10, 15, and 30%. 10% of the first 40,000, 15% of the 40,000 to 150,000, and then 30% after that. And that, you'll be able to fill out this form. It'll be easy to do. It will not require a great deal of sophisticated judgments and very difficult analysis. You don't have to file this if you don't want. If you prefer to file the long form, God bless you, you can do it. It might save you money. It might make sense for you to do it. You might want to do this just because you don't want the aggravation. But this is what I believe in. I believe in giving Americans choices, giving them options. After all, it's your money. It's your choice. This will save you a great deal of time, and in most cases it should save you money. A family of four earning $80,000 per year here in Florida would see their estimated federal income tax burden reduced by $2,207 approximately, or a 24% decline. A family of four that's earning $120,000 per year would see their estimated federal income tax burden reduced about $7,000, $7,014, or 36% reduction. That's money that you get to keep in your pocket. And part of the reason that I believe in tax reduction is I believe where we can, if I can leave money in your pocket, you'll spend it more intelligently than government will. You'll spend it more creatively than government will. You'll spend it in ways that produce jobs for other people. You know, you'll invest in something. You'll buy something. That will mean that a store expands by an employee or two, or maybe a business expands by a couple of hundred employees or so when they see that they're looking at a growing economy and it makes sense to do that. So this is the major reform. In and of itself, it will result in a tax savings, as I've described, but it also will make the tax code a lot simpler to understand. Then I have proposed, and therefore we're going through now all of the other proposals very quickly, a corporate tax cut of from 35% to 25%. And the reason for that is that our corporate tax is the second highest in the world. And the art of strategic tax cutting, again, you can't cut every tax. Not every tax is going to result in increased revenues if you cut it. But if you know what you're doing and you cut taxes strategically, you can make money on cutting taxes. You can actually get more revenues out of it. This is one that I believe will produce more revenues. The reason is our corporate tax is now the second highest in the world. Only Japan has a higher corporate tax than the United States. Anytime you have the highest, second highest, third highest in the world, in the global economy in which we now exist, you get hurt. Because think of the investors and businesses as alert consumers. They look for the best place to put their business. They look for the best place to get a return on their investment. And when you're at the top of taking money away from them, then the money starts to tend to go other places. That's why we've lost some of our pharmaceutical industry to Ireland, some of our insurance industry to Bermuda. We cut that tax from 35 to 25%. We're going to keep a lot of businesses here. We're going to give a lot of businesses the sense that things are going to get better in the future, which means they're going to start thinking expansively. They're going to start thinking growth. And we're going to be able to bring a lot more money here because our rates will then be not the lowest. At 25%, we will not be the lowest corporate tax in the world. We'll be competitive, and that's the point. You want to be competitive. And then one of the secrets to America's historic success is that we're an engine of innovation. We pioneer new technologies, we create new industries. But this Democratic Congress recently allowed the research and development tax credit to expire, choosing higher taxes over a commitment to America's innovative edge in the global economy. So we need to reinstate the research and development tax credit to help American companies find solutions to these big global challenges that we face. Like, for example, finding more solutions and better solutions to energy independence. That's going to require a lot of research and development. We want to encourage that. We want to encourage innovation. That's our value added in the global economy, being an innovative country. You know, we buy a lot from overseas. We want to be able to sell a lot overseas. In order to do that, we have to keep innovating. We have to keep creating. And we want to encourage that. Another tax that we will do away with is the death tax. We'll give the death tax the death penalty. Okay? Sound good? And of course, it'll make 2010 a much safer year for everyone. But you know why? Because I think it's 2010, right, Steve? Yeah. The death tax in 2009 will be 45%. In 2010, it'll be 0. In 2011, it'll go back to 55%. In other words, if you die in 2010, your family doesn't have to be hit with the estate tax or the death tax. And this is going to be a very difficult year for a lot of people. We don't want it to be a difficult year. So how about we just do away with the death tax, which is a double tax anyway, and one that really penalizes success. President of France wants to do away with the death tax in France. If he wants to do away with the death tax in France, it would seem to me an entrepreneurial country that rewards success like America would do away with the death tax here. And the capital gains tax, again, a tax that's very, very sensitive to where money moves, investment money. It's at 15% now. We should reduce it to 10%. That 1/3 reduction in the capital gains tax will mean a lot of investment in the United States. And it'll mean, I think, even better returns in terms of receipts. The alternative minimum tax is an example of the unintended consequences of congressional overreaction. It was created in 1969 to affect what they thought were going to be, I think, 155 wealthy individuals who weren't paying their fair share. So here's an alternative minimum tax established for 155 people who seem to be getting away with paying their fair share of the taxes. By now, it's threatening to impact 20 million Americans who are middle-class Americans, not millionaires. That's why we're going to index it for inflation. That'll immediately halt it exactly where it is so it doesn't spread any further. And then we will work with Congress to find a way, as part of an overall reform of the entire tax code, of eliminating it. We also need to see Americans save more. Saving rates have been declining, and that can lead to a sense of economic insecurity. So what we will do is create a new tax-free savings account. People can use these accounts to buy a home, to pay for education, to pay for retirement, give them an incentive to save more money, which is something that we absolutely need to do. And it's a new way to empower individuals toward financial independence. And then our health care tax exclusion accomplishes the same thing. I've spoken about it quite a bit as a way of getting people into the private market to buy health insurance and driving the price down. But it also turns out to be a new financial asset that people can have, particularly young people. If they start buying health insurance at an early age and they set up a health savings account, that health savings account can be a very valuable asset after 10 years or 20 years or 30 years or 40 years. It can be used for health care, it can be used for retirement, but it creates a new asset. And it's all built around a $15,000 tax exclusion for families, $7,500 for individuals who buy their own health insurance. We also have to make sure that the tax cuts that President Bush brought about in 2001 and 2003 are extended. Now, absolutely. The Democrats talk about it this way. The Democrats say that they want to allow the 2001 and 2003 Bush tax cuts to expire. Well, that's a kind of a euphemism. What they're really saying is they want to give you the biggest tax increase in history. Because if you let them expire, taxes go up 20 or 30%. So what you're looking at is the biggest tax hike, probably, I believe, in history. So we have to make sure that those are extended. I also believe that if we extended them, we would see a lot more confidence in long-term investment in this country. If you're considering an investment now that goes out 4, 5, 6, 7, 8, 9, 10 years, and what you're looking at is the prospect of a vast increase in taxes, you're much less likely to make that investment. And it has to be affecting people right now who are making those determinations. On the other hand, if you see the possibility even of a favorable tax picture over the next 5, 6, 7, 8, 9, 10 years, then the likelihood that you'll invest in this country, keep money in this country, keep jobs in this country, that likelihood increases. And that's why these tax cuts are so important. There's been a lot of talk in this election about change, and it really is going to be about change. But here's a nice, simple way to look at it. If you elect one of the Democrats, you are going to have a change. Your taxes are going to go up 20 or 30%. If you elect me, you'll have a change. In one way or another, we'll get many of these done, and your taxes will go down. I can't promise you we'll get them all done. I can promise you I'll fight for all of them. I can promise you I have a pretty good track record of winning a lot of these. But this will be the agenda that we have. And who knows, as we move along, we may add a few more to it. As I said, in New York City, I ended up with 23 tax reductions. I had proposed 64. So the reality is you've got to put these things on the table if you ever hope to stop taxes from going up and then actually bringing them down. So what this is all about is a principal fight over a very big difference of opinion about whether America is better off by being high tax or low tax. And I believe that we're much better off being a country that tries to get ourselves to low tax rates so we put more money back into the private economy. So every election is about change. This election is going to be about a lot of changes, and one of the big ones is lower taxes or higher taxes. Which would you prefer? Lower taxes, right? So it will be a clear choice. This unprecedented tax cut plan will spark the engine of our economy. It'll enable us to hand off our nation to our children better than it was handed to us, a more prosperous nation, a growing nation. Together, we have great challenges to face. There is no time to waste. There's no time for excuses any longer. It's time for accountable leadership, and it's time, and that's why we're here in Florida, it's time for Florida to do what Florida has done in the past, make its voice heard. Florida counts in this primary season, and we are going to make sure of that. Thank you very much. Thank you.
Well done. Well done.